Small. At GoDaddy, we help you take that first step.
Hello, hello. Are we back? Let me look at my stream and figure out if my mic is actually working now. There's always a problem. Okay. We are back and we are working. Let me just change the gain here. Switch it down, the filter. Switch it down to there. 1, 2, 1, 2. Yeah, that's right. Let's get your... According to my friend, guys, according to my mate, he has full boards at his accounts. We are going to see if he's trolling us or not. Today's going to be call outs, guys. Let me just turn down this music a little bit. Okay, we're going to call out some trades today, hopefully. There is news happening soon. Let me just look at the economic calendar for today. New York. 8:30. 15 minutes, guys. 15 minutes. You have the unemployment rates. Khan, if you are listening, I don't know about this, bro. The American shutdown is still happening in New York. I mean, in America, so the government shutdown. So I don't know if it's going to shoot up, but yeah. If we look at, okay, let's just start with our top-down analysis for you guys. Let's look at gold. Like I said, guys, in the comment section, you'll see yesterday we got 3 out of 4 correct. And hopefully today will be a similar type of trading. For example, this one here was one of the call outs on gold. Okay. This was a classic AMD setup. So you got a bunch of accumulation, shoots up into the previous day high here. Okay, just taps it there. Now, ideally, you'd want more of a sweep. Okay, so you'd want it to come up like here and then do this, but it's fine. So it swept liquidity and then inversed a fair value gap here. Okay, and then created a fair value gap that it then came in and touched. With all that criteria, yesterday, if you took this trade, look at the rewards. A 1:6. Okay, we had it here. Where was it? Somewhere here. Okay, so we were targeting Asia lows at that point. Okay, which is here. But look at it just melt, right? So this was the one we got right. So now today, just like yesterday, remember the previous high was here yesterday. Look at what happened. We were talking about it when it was here. Okay, this is when we started talking about it. And I said to you, I said, we probably going to target the previous day high, which was this, which is again the previous day high, right? Same level. So we're targeting that now, which is now equal highs, which is a strong drawn liquidity. So if you draw a line from here, from this one, it will line up perfectly. See, Okay, so that's equal highs. So that is a strong drawn liquidity. So we'll just get rid of that for now because we have the line there for previous day highs. So it came down. It took the previous day low. Look at this. Look at, I mean, not previous. Where was the previous day low actually? If that was previous day high. I'm talking yesterday, not. We know that this is the previous day low from yesterday. But the one before that was. Pretty sure it took the previous day low. Anyway, let's just get rid of this. Let's get rid of this. Okay, so this big dump took out a ton of liquidity here and has been slowly reversing upward. Okay. Now, if we look at today, we're looking at the previous day high and the previous day low because, again, that is what we normally target. Okay. So you're looking at targeting this, right? And this. I like to draw stuff on the chart because people are visual creatures. A lot of people learn by visual cues, visual data. They don't like to just be told this is what's happening. So as I'm talking, I'll probably draw on the chart so you guys can see. Okay, so we have London, which has been going down, and then it basically retraced back up to Asia going down, and then London has gone back up to Asia highs. So we have like this V movement, okay, which is not, it's not like this movement. So it's still momentum and still price is moving, but it's not moving at a crazy pace. Now, again, if you were a very patient person and you wanted confirmation, when we were speaking about this here, I said to you guys, okay, it will most likely come up to the previous day high, which is exactly what it did. Okay, it tapped the previous day high and then inversed a fair value gap. So if we apply this logic to this, we would want it to pick a direction. Okay, either it will take this bunch of accumulation and do this. Okay, let's do the pathing tool. Okay, so we have this accumulation. Like, let's start from here. Okay, all this accumulation, right? That's all this is accumulation. All of this, right? And then let's say it does this, and then it does this. Okay, let's say it does that, and we look on the higher time frame and we see what? Fair value gaps. So if we look on the hourly time frame, it's in an hourly fair value gap, right? So that ticks one of the boxes. If we look at the 30 minutes, inside a perfect fair value gap here, right, for the 30 minutes. So again, it ticks a box there. So the hourly, 30 minutes, 4 hourly, fair value gap. So it's in a fair value gap, which ticks a lot of boxes, okay? So that's the first thing, okay? If it comes up and does that and leaves a fair value gap like this here, okay, leaves a fair value gap on the way up, inverses that fair value gap with a strong purple candle, which would be red candle on your charts, okay, and then says if it closes too far down, okay, and we kind of know what's going on here at this point. So if it inverses with a strong candle but closes too far down, you can wait for the retracement like this. Okay, so if this closes like here, for example, right? You can then wait for, let's do another pathing tool. You can then wait for it to do this into the fair value gap, or touch the fair value gap and then go down. Okay, and target previous day lows. Okay, that's what we can look for now, right? And vice versa. If it shoots down and does the opposite, then we can look at targeting the previous day highs. This is a bunch of built up liquidity here, because there are stop losses above and there are stop losses below. Okay, so when it picks a direction like this and shoots up, it's typically saying, okay, I want to take all the top stop losses and then I'm going to target the bottom stop losses after that and continue down. That's generally what it's saying to us, because we have taken the Asia highs from, so we top of Asia, bottom of Asia. From the bottom of Asia, it worked its way up to top of London, made the London highs, okay, and has just been accumulating now. Okay, so from this, it's telling us a story that this is liquidity it's taken, this is a high it's taken, this is a high it's taken. It's now taken a bunch of liquidity, right? And it's going to pick a direction. It doesn't have to do what I've just drawn on the chart. I'm merely explaining to you that this is an accumulation. It needs to manipulate up or down and then inverse the fair value gap and pick a direction. Thanks for the follow. I appreciate it. Thank you so much. Guys, if you want to interact in the chat room, go for it. This is again my opinion on trading. It's not exactly like this is a fact, okay? All I'm doing is calling out what I think might happen on the charts. You guys can then make a decision based on that. News is coming very soon, guys. A couple of minutes, we have news. So I'm going to get rid of this because that is just what we think might happen with gold. Okay? But now with the news, okay, that just throws everything out for a loop, because if we look here, we have an hourly fair value gap here, okay? So what could happen is that the news candle shoots down into this fair value gap, takes it, and then decides to shoot up and take the previous day highs. Or it does what we said. It'll shoot up, take all this liquidity that was built up, and then take the previous day lows. But because it's news, that's the only thing. News can just basically pump in one direction, basically. It could just go boom, 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 all the way up. Well, good luck, Khan. I hope your trade does very well. Friend of mine is in a trade at the moment. I am not in a trade at all. Ask my friend if he wants to go on Discord or not. So I don't know if he's in this chat at the moment. Okay, so we have our targets. Previous day high, previous day low. These candles are just the indicator, guys. This is not part of the charts. This is the hourly and this is the 4 hourly. Okay, it's just an indicator showing me where the fair value gaps are and where the liquidity is resting. So this is the current price here. So this fair value gap here is this. Okay. That's all that is. We have 2 minutes to go, guys. 2 minutes to go. Let's see. Okay, all we've looked at the moment is gold, guys. So if we look at NASDAQ, just briefly before this, we've now taken previous day highs. We've swept London highs. This would have been your AMD setup here. Let's look at the 2 minute. I guarantee you there's a 2 minute AMD setup. Accumulation, pushed up, manipulation, left this kind of. It's not the strongest thing ever. 1 minute, 3 minutes. I wish there was a bigger fair value gap here. If this was slightly bigger, it's still valid, but if it was slightly bigger, there's your perfect AMD setup right there. Accumulation, manipulation up, taking the London highs, inversing the fair value gap created, and then it just melts. Guess he doesn't want to go on Discord. I hope it just pumps for his sake. 5 seconds. Good luck, Khan. Go up, go up, go up, go up. Go up. I mean, it's Khan, so it is going to go up. The amount, you guys don't understand the luck that this guy has. I call it Khan luck. So there's no way that this thing just dumps. I was actually a little bit like hesitant because of the government shutdown for pass or fail. Nah, man, this thing's gonna. You're in the trade, bro. This thing's gonna shoot up. Watch. Watch. Just put that magnet, bro. There's the magnet. There's the magnet for you, bro. Very anticlimactic, I must say. I must say. Very anticlimactic. Okay, well. Sorry, bro. So let's review what we said here. We think that this could shoot up, take the liquidity up here, create a fair value gap on the way up, and then basically dump. Okay? Targeting Asia lows or previous day lows. That's what we think might happen. And vice versa. If it takes the lows here, a bunch of accumulation with 1 or 2 strong candles, and then pumps, then so be it. There you are, Khan. There's your little pump. Told you, bruh. I told you, you're in the trade. Do you really believe? Do you honestly, truly believe that if you are in a trade, that it's going to go the opposite way? Come on, bruh. Based on everything I know about you, that's not happening. Well, I guess we know. I guess we know which direction this is going because Khan isn't along. So we know it's actually coming up the previous day highs. I would say we could put money on it, but technically money has been put on it already. Now, if Khan was in shorts, then we could go, okay, cool. We are targeting previous day lows because whichever trade Khan is in, it will go that direction. You guys have no idea the power this guy has when it comes to trades. Yeah, they do. Your luck also moves the markets. But just be careful. Remember what I said, bruh. You might not take this analysis seriously. But I said if it shoots up and takes all of this and all of this, it's taken London highs, it's done all that. It could, not to say it will, inverse a fair value gap here and start shooting down. But then again, you're in the trade, so yeah, probably not going to do that. Let's see here. Let's see. We're in an hourly fair value gap to the left, right? Happy for you, bruh. Happy for you. It's going in your direction, bruh. I would not sell anything if I was you, bruh. I would just hold this bitch until it came all the way up. Excuse my French, but I would hold this until it rode all the way up. Not salty. I was just asking. Just interesting, that's all. Very, very interesting. Today of all days. Literally the day after. Very interesting. So it looks like there's a market structure shift. Again, I can't stress this enough. It does say bullish, bullish. However, it could potentially do that. It doesn't have to, and there's no rule saying it has to. It's picked a direction, Khan. This could just bounce in here and go all the way up, or it could inverse and go all the way down. But this is the 5 minute that is going to dictate whether we go up or down. Look at that, bruh. GG. Account passed today. Well done. We'll do the congratulations dance, bro. Hey, hey. Let's do the hop. Let's do the hop. Hop City. Hop City for Khan Maya. For Khani. Account's going to be passed today. Very good, very good. Gonna be making money, honey. That's my boy. That's my boy. That's my dog. My dog. Let's look at another pair because we already know which way gold's going because Khan's in the trade, so it's definitely going up. Let's look at euro for a second. Okay, yes, we got a good trade there for euro. Okay, so we have our previous day low, previous day high. Okay, let's get rid of this, even though it seems like it's a strong liquidity area. We bounced off of it. Okay, so we accumulated, if you look, zoom out, okay, we accumulate here, right? We come down, we bounce off this area, we go up. So either this is going to be a continuation up to this previous day high level from here. It's just going to start accumulating, going up, or price will start moving, going up to this level. Okay, because this is a very strong draw in liquidity, this level. And I would say that that's more likely the case what's going to happen. Or there'll be a reversal over here somewhere. So it'll come up, it'll take a bunch of liquidity, either this one and this one. Okay, it'll take that, form a fair value gap on the way up, inverse it, and then come down, target the previous day lows. But more likely, it's going to come up and either come take the previous day highs and then inverse to come take the lows. That's what we're looking at. So that is the plan. Okay. Let's look at silver. So we know euro. Let's look at silver. Let's get rid of this. Silver was a good entry. Okay. One of the three that we called out. So our target's there. And our target's there. Notice, guys, that it's always the same targets. Why? Yes. Because there are very strong draws on liquidity. Price will go and hunt the previous day high and the previous day low. Going to get rid of all of this. Okay. So if you look at the 4 hour, and what I'm looking for here is this is all-time highs. Yes. Okay, so all-time highs for silver. It's inversed. So it's definitely coming up to previous day highs, right? That's my opinion. If I look at the hourly, it's inverse the hourly. There is a fair value gap here that's very small, but it is there. Okay, so I think this is still coming up here. So when it comes up here, you're looking at a V-shaped recovery from there.
Put some petrol in. And go to the shop.
Is that where you're going?
Are you going to put petrol in and go to the shop with the key?
You're going to tell her the internet?
No, that's only going to happen on Monday.
It can't. Okay. All right, so silver is basically, in my opinion, going to hunt the previous day high because there's a top there. It's definitely going to go there. Okay. Nothing's definite, but chances are that it's going to hunt that. Okay. Everything's bullish, and gold seems to be bullish. Silver seems to be bullish. So Khan should be at like $1,000 or $2,000 now. So that's doing very well. I don't understand how you haven't passed yet, Khan. You don't need to make $4,000. You can just make 1,000. I think. What do you need? You need like $1,000, and then you've passed. Surely. Let's look at AUD. Since we know gold is going all the way to previous day highs, let's look at AUD, guys. AUD is once again targeting this. And if everybody's saying in the chats or thinking to themselves, this just sounds repetitive. Yes, that's what trading is. Trading is repetitive. It's pattern recognition and it's repetitive, doing the same thing over and over. What do you mean need more money, Khan? You should be past your account now. Money's not the issue. Because once you've passed your account, then you can say, yeah, 2,000, 3,000, 4,000 is all good. But until you pass it, you don't need, you just need to pass it. Okay. So if we look at this, and we look at the higher time frames, okay, so we look at the hourly, it's bouncing off an hourly fair value gap here, right? So we first bounced off this hourly fair value gap. We pushed up, okay. We technically almost taken those highs in the fair value gap there, but we did bounce off here, so we're delivering from that. So I think this is going to go up to this fair value gap first and make a decision. So if it goes up, stops here, okay, so if we draw a fair value gap here, just to say that there's an hourly fair value gap here, right? Let's look at the 4 hour. Okay, we are in a 4 hour. So if it inverses this, then it's going all the way up. If it bounces off here and reverses down by doing an AMD setup, then we at least know. Okay. Because remember, guys, what are we looking at here? What are we looking at? We're looking at from here accumulation. Okay. This is all accumulation. Right? So we could either manipulate up like this into this fair value gap, right? Let's make it, let's just do that. We can either manipulate up into the fair value gap, and then from there we will inverse and go down, right? I like to do this because people are visual learners, guys. Okay. Accumulation, manipulation into a higher time frame fair value gap, right? And then it creates a fair value gap on the way up. It then comes down and inverses the fair value gap and then distributes all the way down to the previous day lows. Now, if it goes up and inverses by closing up again at the top here, instead of respecting it, if it disrespects it, meaning closing up here with a candle close, then we are going to target this area. Okay, it's that simple. That is what is going to happen from this level. Either we're going to respect this hourly, because this hourly is the top of the 4 hourly as well, or we are going to disrespect it and keep going. Okay. Hope everyone's in a understands that analysis that I'm talking about. Okay. Let's look at Nasdaq again. Does everybody see what I'm looking at here? Okay. Look at this. Let's do it again. Accumulation. Right? Accumulation. Manipulation. Distribution. Everybody see that? Okay, so if I go change the color, there, change the color, there. Everybody see this? Okay, this is not random. This is not something that is like, it's not something that just happens once in a blue moon. This is all pattern recognition. The reason why this would be a valid trade is because this white line is the previous day high, which is on all the other pairs we've just looked at. We are targeting that white line, okay? That white line is the previous day high, the previous day low, right? So Nasdaq already took the previous day high and said, now we want to go to the previous day low. So if you were on the charts at this time and you saw all of this accumulation, right? Because now we've taken it and it's accumulating on the previous day high. And then you saw this manipulation up to take that wick and this wick and this wick and all these other wicks. It sweeps it up like this. It says, thank you very much. Because there are hundreds and hundreds and hundreds, if not thousands, of stop losses here. Right? So all the stop losses, meaning, this is what I mean. People are going short. They're putting their stop loss here. They're putting their stop loss there. They're putting their stop loss here. They're putting their stop loss there. All over this place, there are these stop losses like this. Okay? Because people want to catch the move down. So there's a bunch of stop losses. It's now said, thank you. I'm taking all of you out of the market. I've left the fair value gap. I have inversed the fair value gap. You guys can see the fair value. Do I have to draw it? There's the fair value gap. Okay. It's closed below that, even though there's a separate fair value gap, so I'd increase that. It's closed below, and it's just dumped. This is an A plus setup. A plus plus, right? So if you were on the charts at this time and you saw this, there's the A plus setup. That is AMD right there. Okay. So let's look at gold. Khan says it's pumping. Yeah, brother. I told you. You in the trade, bruh. That's just the way it is. There's no way you don't pass your account. There's no way. Not with your luck. Now, guys, you will see me trade the AMD setup on certain time frames. I will do the 5-minute mainly. I will do the 15-minute if I think the 5 minutes is not a proper valid setup, or it just closes inside the fair value gap, or just out too far out, whatever the story is. I'll go to the 15. But you will also see me take it on the 2 and the 3. And very rarely, but the 1 as well, but not as much. The gold is just going now. Look at that. Okay, guys, so at least one of us are having an amazing day today. My mate Khan is gonna get his account gonna be passed. Oh, excuse me. His account will be passed today, which is good. He apparently full ported. I don't know if that's true, but yeah. Let's look at AUD again. Remember we drew up this fair value gap here. So if we look at the hourly again, there is a fair value gap that will draw up here as well. Okay. Okay. And of course there's this one. But for now, that's the closest. Well, there is one here, I guess. But you don't want to draw too many fair value gaps. But these ones are targeted. We'll look at Euro. What did we say for Euro? We said there's a hourly here. Hourly there. Okay, let's go to the 15. Let's go to the 5. Accumulation, guys. Accumulation. Some people could actually interpret this on the 2-minute. See how all of this is accumulation? And then it does shoot down there for a second, right? Creates a fair value gap here. It is small, but it is there. Okay. Inverses the fair value gap, right? You put your stop there, entry there. So this is what it would look like if you took this. So you could either do that or that. Entirely up to you. You manage your risk your own way from there, and you target at least this area. That's your AMD setup. Accumulation, even that you would incorporate all of this into it. Accumulation, because this wick took out that, this, all of it. Okay. So yeah, you could, because this could technically be, it could continue. It could go up here to this level, right? And then come down, up, down, up, down. But now, if you're in this trade, and you saw this trade because it's the 2-minute AMD setup, if you saw this trade and you're in this trade, I would be at break even by now, 100%. So this should be risk free. This is not a call out from me. This is just acknowledging a trade because I didn't see this happening live. Okay, let's look at a 15 minutes fair value gap. That it prospected. Yes, it did. It did. Okay. So only if I'm talking about a trade that's happening live will I say that's one of the call outs, guys. Or if there's like one candle after it went, because then, yeah. Nasdaq. I mean, this was just the trade of the day for Nasdaq from 8:30. This was, yeah, this was your big trade. If you took this, very good. Okay. Right, what do we think? Any opinions in the chat? Who's here? Any opinions about Nasdaq, gold, euro, silver, or AUD? So if you were also looking at this trade and you said to yourself, you don't want to incorporate all of this as accumulation, you could literally do this. You could go like, here is accumulation. Okay. There's the accumulation. Here is the manipulation. Okay. And this is the distribution. You see? Now, obviously, this might come out and take you out at break even if you got into this trade. But at least you haven't lost any money. Okay? And this would have been... This would have been 1 to 2. So a lot of people trade 1 to 2. So if you are a 1 to 2 trader and you took this trade, this will be a winning trade. You'd be like, hey, W, W, W. But a lot of people are 1 to 3 traders. So that's what they're targeting. So they're holding out hope, basically. Okay. What am I doing? Right. Let's look at some of the other setups here. What do we see here, guys? It's on its way to taking the previous day low, but it's taken Asia lows, which means depending on how much of a market structure shift it takes, it could really actually want to come back up, but I don't think it will. Let's look if there's an SMT. Okay. Just curious to see how this plays out, guys. How does this play out? There's the price. There's a fair value gap above. We are... let's see. Let's see. Gold. Okay, well, gold is gone, obviously. So we can do nothing until we get up here, I guess. But it might just take a while. Questions, guys? Any questions? Throw them in the chat. If you guys want to hear anything else, what I can do is go through some strategies. But what I've been asked to do before I got on stream was explain how prop firms work and how to get them. So if you are a person that has been wanting to make the move from paper trading to a prop firm, firstly I'm going to explain what you need to do to get to that point. Okay, you need to get TradingView and you need to pay for TradingView. Okay, so like the starter basic plan or whatever, right? This gets you live data. So this circle needs to be green, right? So that's live data, so that you have the most accurate information possible. Okay, now once you are familiarized yourself with how to place a trade, meaning if you go trading panel trade with a demo account, it comes up with the stuff on the side here where it'll say market, limit, and so on, right? Once you're able to use that tool, you'll go to a platform like Tradeovate and you'll create a profile. But before you do that, because you're going to want to trade with futures. Futures is better than trading like your forex pair, your forex type of trading, which is because you don't get a spread. So if you enter here, for example, and the spread puts you here, then that's just the way it is. So instead of entering here, you enter up here. So that's just silly. So, but the rules are a bit less stricter, I would say, on those accounts. On futures accounts, the rules are a lot more stricter than the other accounts. So how it works is that you would go to a company and they would have multiple different packages. They start from as little as $5,000 or $6,000, and they'll go all the way up to 300,000 or 200,000. Okay, and depending on the prop firm, which is what you need to familiarize yourself with the rules. Okay, so if you pick a prop firm, and obviously you would pick one of the, let's say one of the top 3 prop firms, you choose one. Okay, familiarize yourself with their rules, understand their rules, because it is extremely important to not break or violate those rules, because if you do pass that account, which is a big if, then they will find a way to basically screw you by saying that you did this, you did that, you did this, you violated this rule, you didn't do this, you traded this way instead of that. Like, they will find a way to not pay you, because that is what they do. You have to be so squeaky clean and follow the rules exactly, and not break any rules, and not be erratic with your trading, and just stick to a plan and follow that plan through. So if you're doing a mixture between AMD, inverse bear value gaps, then just stick to that. Don't just randomly put trades in because you feel like the markets are going to go up, or you feel like the markets are going to go down. You have an intuition, a hunch. Like, no. Because you could be putting a trade, maybe they don't allow you to trade news, okay? News trading. And then a few minutes before news, you put a trade in, and all of a sudden it shoots up and you make $1,000 or $2,000, and you think you've passed your account now. And they say, well, no, you've actually breached your account because you traded during news. And then you lose your account. So you need to understand the rules. The rules are extremely important when it comes to prop firms. So the process is this. You're on TradingView. You've got an account on TradingView. You register with the prop firm. You start off with their smallest package they have, which will be like $15, $20 for that package. You sort that out by linking it with TraderVate, or whichever, Ninja Trader or TraderVate, whichever you're doing. Okay, if you're in South Africa, TraderVate does work. That's the one I use. Okay, so you would link it, for example, in the back office of the prop firm. They will have a section there where you link it to TraderVate. Then once you've sorted your profile out on TraderVate, you've agreed to all the terms, you've signed up, you've linked your account, your futures account, you then come down to trading panel, and then you would go on to TraderVate here. Okay, and then from there it will just basically, you log in with the details that you created for TraderVate that is linked to that specific futures account. And then you'll see on the side here, it'll say account history, and then on the corner here it'll tell you your full amount. Right now, once you have that and you are now live with your TraderVate, you would trade as if you are trading the demo, but now you're trading with actual your prop accounts. So that's how it's going to work. And I recommend getting the smallest package possible, just so that you know that if you fail that account, that it's okay, because it's an amount that's not like $100 or $300 for an account. There are accounts out there that cost $1,000 or $2,000 to attempt. So you are paying $1,000 or $2,000 to attempt to pass it. That's crazy. But then again, there are accounts out there that you pay that amount and you are basically having a live account from day one. So it all depends on your experience levels and your, like, what do you want to do? Okay, so that's the prop firms, and that's what I'd recommend. Okay, And if your prop firm is telling you need to pay a monthly fee until you pass your account, like Apex, I think, does that, I'm not a fan of that at all. Unless you know you can pass your account straight away. Because you might slowly go up, down, up, down. You lose a few, you win a few, you lose a few, you win a few, whatever. And it takes you a long time. And then now you're paying for multiple months. So unless you're super confident, don't do that. I use a prop firm called Funded Next. Okay, Funded Next is straightforward, and basically they've got futures now, and it's all linked. It's all perfectly linked. It's fine. I'm going to turn this music down even more, or try to, because it's too much. Why can't I turn it down even more? I'm trying my hardest to turn this down. See, that's the lowest I can go. Okay. So another thing that I'm gonna do today, guys, because I mean we're just waiting at this point. It's almost market open, right? So this you would have got taken out at break even. Okay, so this is a break even trade. Right? Well, let's get rid of that. So depending on how tight your stop loss is there, you could have taken a 1:3 over here. But that's just if you're very risky. Yeah, our targets are still previous day high, previous day low. But now we have fair value gaps that are targeted on AUD. Okay? Remember, this is a bunch of accumulation. It's now decided to push up, inverse. There's the fair value gap, right? There's the fair value gap. Look on the 15. Look at the 5. So that's the 2 minutes. So let's say the 3 minutes. There's a 3 minute, there's a 2 minutes. So let's use the 2 minutes, okay? There's your setup right there. Accumulation pushes up, right? Leaves a fair value gap. Here's your short right there. Boom. Either above the highs, which to be really safe, or above the fair value gap. Okay? And then you ride it all the way down to this fair value gap. This would be your trade right there. Okay. Everybody see that? You can do it on the 3 minute and you can do it on the 5 minute as well. Right there. Inverse. Came up, tested the fair value gap again. So you could enter straight down. There's the trade. Okay, we didn't actually catch this live. We caught this as the move was happening. But that's in essence what we would look for. Okay. Still a bunch of consolidation. This Nasdaq one was the trade of the day. Boom, right there. Above the highs. That's what we always want to try look for. Right there. This is the perfect setup for the day. Okay. So that's today's more of an educational thing because we're not seeing it live. We're not catching them live like we did yesterday because I'm yapping on about other stuff. I'm not really surfing the charts like I was yesterday. But if I had to go through each chart every minute or two, then we would eventually catch these live trades like this. So we look at silver. Okay, basically silver has done the market structure shift, bounced on the fair value gap, and now is going to target this area. Okay, so that's something we just have to sit and wait. Accumulation is just accumulating until it manipulates in this area and then dumps. Can't look at anything really there. This one broke all this here and then inversed and decided to go, so we can do nothing now but wait. But you would be at break even now. If you took this, you'd be at break even because you got to that level. Nasdaq, this is interesting. Very interesting. We have a market structure shift. Okay. Nice. Bro, I'm sure you only needed that amount to pass. I'm pretty sure you only needed that amount. Come on now. You were in profit already and you only needed 1,500 in total, but you were like 600 in profit or something. So there, you've passed. Done. Congratulations, bruh. Round of applause for Mr. Khan for passing his account. Give him a clap. An emoji clap. Very cool, bro. Very cool. Next week we are going to start hyper focusing on trying to catch these trades that I'm drawing up. These this trade here, for example. Yeah, we're going to try to look for these setups. Let me tell you something now. A setup like this, being as A+ as it is, I will take any day of the week and all day long. All day long. This trade is a trade you take all day long if you're doing the AMD setup. Okay? What this is, guys, let's remind you. AMD inverse market structure shift. Here comes the market open. AMD is accumulation, which is what happened here. Manipulation happened. Manipulated and took out a bunch of liquidity. That is the top of London. Inversed on the way down and basically distributed. So this is market open now. This is market open. Let's see what happens. Yeah, I don't know why you pulled it, Khan. I don't know why you pulled it. I don't know why you pulled it. This is you, bruh. Why would you pull a trade that you're so far in profit because you know it's coming up here? Oh, I thought you pulled it at 980. That's what I thought you meant. Oh, well, that's good then. How much do you need to pass, bro? Because you keep telling me you're going in this profit, that profit, but you're not saying, okay, this is how much I need to pass. Because then you don't need a $2,000. You just need, let's say, 1,100. Yes, so how much do you need to pass? That's what I'm asking you. Aibo. Okay. Aibo, look what's happening here, Khan. No, 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 no. Ah, it just came down and swept a bunch of fair value gaps. I wouldn't worry. But then again, well, it's up to you, bruh. You manage your risk, I guess. I mean, $900. 980. I would have been happy, bruh. Let's look at some other pairs. We have Euro. Euro is just literally going sideways. It hasn't picked a direction yet. AUD. AUD could have been a 1:3. There you go. That's a successful trade right there. Come in.
Thank you. I've left the 50 Rand in your car and the little thing. You may put 50 Rand there.
I don't understand what you mean. What?
Me, I put 50 Rands.
Oh,
Little thingy there. With the petrol. I just took it to get paid.
Okay, yeah, no stress. Okay. Well, let's put the magnet out for Khan. There you go. Dude, you're gonna hey, look at this. Look at this. Day after, huh? Day after. Day after. That's all I'm gonna say. Well played, bro. Well played. GG. GG. So get your 1-2 and then get out. Get your $1,200 and get out. Get your 1,200 and get out. Nasdaq is interesting. Let's look at ES. There. Small S&T there. Looks like it might just pump. Looking at ES and Nasdaq. That was my opinion. So we caught the trade of the day there. Well, Khan caught the trade of the day, which was his so-called full port, which he didn't do. He just put a normal trade. I know him. I know him too well. He says to me, I full ported my accounts. Talk of the shit. Talk of the sheets. But yeah, I think this is your target area, yeah, Khan. There. Somewhere around there would be your target. Every other pair is not really giving us much. We basically had two good trades today. Three actually. AUD, Nasdaq earlier on, and gold, I guess. But that was before the news. But that you took that one. I didn't call out that one. But this is the market structure shift, which MMS here. Fair value gap into the fair value gap and then pumps. So pull it if you want, bruh. It's up to you. There's no reason why it won't go up at this point. At least to this fair value gap, which is where your target is. There's the 5-minute fair value gap with liquidity. Yeah, you're right. It's a good dump. Just saying, there's a peak there, a wick inside a 5-minute fair value gap. Previous day highs is over here. Entirely up to you, but I'm just saying, at least midway through this fair value gap should be a target. Yeah, but it would come into the fair value gap for manipulation, right? It would at least come in the fair value gap. Like, see, it's inverse this one, and the next liquidity is this wick here, which is inside a fair value gap. That's just my opinion. Like, what reason would it have just before the fair value gap to go, I'm going to reverse now? You know what I mean? But then again, this is me talking, and my luck is, as you know, no good. Unless you trail your stop up to here. You know, like you put your stop loss right there. Look at that, bruh. Look at that. Look at that. Is the Godfather getting scared? Huh? Is the so-called self-proclaimed Godfather getting scared? Come now, bruh. It has bounced in the fair value gap, so yeah. Yeah. You catch the ones like this when I'm not trading, huh? Oh, I see how it is. It's all good, bruh. Congratulations, congratulations. We'll have a lot more days like this, bruh. We'll have a lot more days like this. Yeah. Yeah, weeks. You wait for weeks. Oh. I'm curious to see your entry here. What made you do it? Let's look at the picture you sent me. It's not even clear as to why you entered this trade. You use the fib level. Let's see. From this to this. Oh, I see. Okay. You must have put a limit order there. It's a good trade. It's been like that somewhere. Bro, you at your target now. Pull your trade, bro. You at 1,200. You must be. There's no reason to continue the trade. It's not like they're going to pay you. Oh my gosh. Are you really gonna fret over over $50? $1,150. Oh my lord. Khan, it's gonna reverse it. Hit that 5-minute, bro. What are you doing? It could reverse now. It's swept that liquidity. It's tested the fair value gap. It's rejecting off of it. I'm worried for you, bruh. When it got here, you should have taken it. 100%. Whether you're $50 away or $30 away. Ah, nice, bruh. Nice. Well played. GG's. Well played. Let's give a congratulations to Mr. Khan or whatever dude. He made 1,150, I think it is. Well played, well played, well played. Very good. Very, very good. Very good. Let's go to Nazi. Nazi, did it give us any entries? Nasdaq. There's a SMT, fair value gap. So there's a bullish SMT, so you're looking for a 1-minute entry. So you could take this. Delivering from there, you could do this. As a quick analysis. Why, you say? Could increase your stop loss if you really wanted to. Oh, this is ES, never mind. Okay, never mind. Let's cancel that. Our rule is both pairs have to be inversed. And since one didn't and one did, our rule cannot be broken in that sense. Let's look at the 2-minute inverse, the small 2-minute inverse. So the 1-minute, if both had inversed, then yes. That inversed, yes. See how it's struggling to inverse on Nasdaq, but it inversed on ES. Okay. Also, look at that SMT, right? See why, guys? Look at this. Nasdaq did not inverse, but ES did inverse. Even though there's an SMT here, that is a significant factor. Okay, if Nasdaq inversed and ES inversed, we could take this long. And then we can target the London highs, this high here. See how gold is delivering from this fair value gap? This is what I had a sneaky suspicion that might happen. It could still just pump through and get previous day high. It's just, it doesn't have to. Oh, there's news. Everything's just choppy and accumulating, guys. Okay. Looks like the inverse might work because we have both inversed there and there. So now you could, if you wanted to, take along, even though it has taken these highs, which is no good. This is a tricky one, guys. The fair value gap is so big, you would maybe have to trade this on ES. But the problem is that ES has taken these highs here, this liquidity sweep, right? So yes, it might be targeting these, which is taken already. So you can't actually long this as much as you would want to. You just have to watch it and leave it alone and let it play out. Because let's say you do this, right? Let's say you enter into the long there, right? Stop loss here, or let's say here. To be safe with this trade, you'd probably have to go down here. But let's just say, argument's sake, let's do this, okay? And you're targeting this, right? You have now swept that liquidity. Here's more liquidity, which is just swept now, okay? I was just about to draw this line, okay? This line here. I was just about to draw that. There, it swept it, okay? Now, it could bounce off here and come straight back down to target previous day lows. That's exactly what it could do. You don't know. So you would be either hit here at break even, which is where you'd probably hit now, or it bounces off and goes straight up. But there, you'd be at break even, you'd be out the trade. So this trade can't happen because of that. This white line. If this white line was up here, then yes, you would target this, you'd go to break even as soon as it hit this line. You'd go to break even because you had momentum going up, and you'd have a risk-free trade. That is the way to play this. Right? And then this would just either continue and target this area. But because it's already taken it like that, then it's already taken it. Does that make sense? Look at NASDAQ. Okay. NASDAQ's highs are here, right? So if I went, so London highs, this is a big thing, guys. Look at this. I'm going to draw this for you. Not a lot of people would have seen this. Boom, right? There's the SMT. Okay, it's small, but it is there. Okay, so here comes the dump. Here comes the dump. Right? And there's also news. Kind of saying there's news now. Couple minutes, right? So here's the market structure shift. And because, again, because ES took previous day highs, NASDAQ doesn't have to, by law, take previous day highs. Okay? There's no rule like that that says it has to do that. Based on what I've experienced. Which means this could easily come down to the previous day lows now. Right? So if we look at the 5, we look at the 3, we look at the 2, there are fair value gaps here that are inversed. So this is interesting. Technically still has a SMT to go up. If there was a solid fair value gap here, you could have taken an inverse with this candle. And like if there was a fair value gap here, you could have taken that inverse and rode it all the way down. Gold's going to lose some legs. Now you have a news candle any minute now. AUD and silver cannot do much. Euro. I mean, technically, this is a hard press. But technically, on the 1 minute, that's an AMD setup. 2 minutes, AMD. So, you could have, even though we weren't watching the charts, you could have done this. I'm not sure if I would have taken this. But technically, never mind. Never mind the news. Never mind. The news just messed everything up. Oh, wow. Look at that. Look at that. Rejection. Previous day high. Do 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 do. Dude, with the amount that you made today, you're done. Like, don't even worry about it. You don't have to look at the charts. Um, hmm. Interesting. See how we called the SMT up there? If we saw it a lot earlier than we did, we could have tried to find a move here, but it's very difficult because there wasn't a clear fair value gap except for this. But look how small this fair value gap is. And it's ES. And ES was the stronger out of the two pairs. Can't even call that a fair value gap. I guess you could. This one, eh. Euro. This is now going to be targeted because it's a Newswick. Okay. What are we doing, guys? What are we doing? Any questions in the chat? Anybody wants to talk about anything? Any question about trading? I don't do stock options. I don't do all that other fancies. I don't do crypto. I literally just trade these pairs mainly. Futures. So if you want to know about a strategy that I'm familiar with, then sure. If you want to know what I'm currently using as a strategy, great. If you want to know any basics about trading, 100%. Certain tools on this chart that I'm looking at that you don't understand, I'll try my best and explain it. Just consolidating now, guys. Except for euro. Now, what sparked this on? This is interesting. This news candle here just literally... Well, yeah, that was crazy. This news candle was absolutely bonkers. Yo, euro was eager to take the previous day highs. Look how eager it was. Boom, just swept. Okay. Now the one needs to close here somewhere and then reverse. Yeah, guys, any questions, let me know. Again, what I can do is quickly go through the inverse fair value gap strategy. I did that with AMD yesterday. So if I look at, let's say, NASDAQ, this has to be a liquidity sweep, right? So liquidity sweep, inverse, a bullish fair value gap if we're going up and you want to inverse down. There has to be a candle close below the fair value gap. Was this the 5 minutes? Yeah. Okay, so the candle closed below here. Right, so stop loss above the highs, and you basically take it all the way down to the first liquidity, which would be this area, and you would go break even straight away. It's really that simple. And ideally there would be an SMT in like how we saw now. Okay, we saw an SMT form, and then this happened. Boom, boom, boom. It's melting. Okay, so SMT, liquidity sweep with the fair value gap in the liquidity sweep, higher time frame preferably, and then they must leave all fair value gaps initially. The first fair value gap that you see, which is the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, all of those need to be inversed, as well as ES. So if ES's fair value gaps are being respected and NASDAQs are being inversed, then it is not a good trade. Right. How was gold? Gold, you would have been in a lot less, kind. Euro has swept liquidity. Not convincingly, but it has swept liquidity. I know people really want a big sweep, which is in a perfect world, you get it. But it doesn't always happen that way. Aren't you thankful that you got out of that card? This could be a retracement for a pump. Okay. So what are we looking at, guys? We have our targets, which is previous day high, previous day low. A lot of the targets have been hit already. They've been swept, which means we're either looking for a reversal off that target or a continuation, so it'll blast through that target, come down, retest it again, and then keep going. That's the two scenarios here, guys. It's that simple. But look at this. Okay. This is a 5-minute fair value gap. Right? This is a massive wick up and sweeping the previous day high. Okay? This is a 15-minute fair value gap. If it comes down, closes below this fair value gap, and the next candle inverses this 5-minute fair value gap, then I will highly expect it to come all the way down. So it will look like this. Come all the way down there. It doesn't have to do what I'm saying here, guys. But this is what I'm saying. Accumulation, right? Accumulation, manipulation up, blasting through a fair value gap, targeting the previous day high, which is where the circle is. That's exactly where we said it was going to target, all right? Then coming down to inverse this. If it inverses or disrespects this fair value gap, then I don't know. You should be looking at taking a short. If it comes down and respects this fair value gap and starts to move upwards, that's also a good thing, except now we've taken the highs. Mark my words about this one, guys. Mark my words about this one. This trade is only valid, guys, if we close below this fair value gap. It's that simple. So no, this is not an entry for a short right now. It doesn't even, we don't even know if it's going to go in that direction. However, if this candle or the next one closes below, then we will have a direction. At the moment, it looks like it's going to pump up to take more of the previous day high. Who got wicked out? On this trade. This isn't even a trade yet. This isn't even a setup yet. I said it needs to close below this fair value gap in order for you to enter this trade. I haven't put one trade in today. I'm not trading today. Okay, well, AUD picked this was the news. Very interesting. It's just more consolidation. So this is a potential setup. Of course, it's not valid until it's closed below. Let's look at the 3 minutes. Is wait, what am I doing? I've completely messed up this. There is no fair value gap there. Shows you how half asleep I am right now. But there is a fair value gap. So you would technically be entered into this already. There. You'd wait for the pullback. There. This is if you did the AMD setup. This is what you would do. This was the news wick. Okay, it pushed up. Then we came up and took the news high. Okay, we took the previous day high. We left the fair value gap after accumulating for so long. Look at this. Look at all of this accumulation. So according to the AMD setup rules, this is technically a valid setup, right? And we would now try and target the previous day lows with this setup. This is the trade. Whether it works or not, this is setups that we will start looking for from Monday. It's swept liquidity there as well. Previous day high. Okay, let's see if this works. There's another setup, Khan. This is Khan's strategy here, guys. Fib from there to there. From the top bottom of the move to the top of the move. 78.786. Bounce. Exactly what it did here. Top of London. Bottom London, top of London. Came down into this level. Bounced there. And now it's going up. Literally doing exactly the same thing. So you would already be at break even on this trade. Let's see what happens. Nasdaq. Let's see what happens to our euro trade, guys. We accumulated for so long. We created a news wick. We then came up, took the news wick, the high. We then swept the previous daily high. And now we've inversed on a 2-minute AMD setup here. This is the first live, well, I'd say second. This is the second live setup that we've done today. What was the first one? It wasn't... What was the first one? Is this the first one? The others we've been a bit late to the party. We've done a couple of them that have worked, but they were always like this, for example, right? This was already almost 1-to-1 by the time we drew it up. So I don't really consider this and make it counts. Because this might even be a break-even trade. The way it looks, the way it's looking, but it did not take the previous day highs, which means that's still up for grabs. So let's see if this one works. I would actually count this one if it works, because all we had was a push up. And we could have targeted that area, but we won't count it. I don't think we'll count it. But this euro one we will count. Silver. This is interesting. Well, I guess this did work. Um, looks like this one and gold might be the two from here that we could have taken. Does everyone understand why this one here would have worked on gold? Okay. Okay, because as I said, you take the fib level from here to here, and this is the golden pocket area. As it touches the 70.8, you enter, and then you look for the long reversal. It's a more like you need to have nerves of steel with this one, but this is the whole reason why. Like, I think Khan got into this one here because that was the trade. So yeah. Well, I guess we're just gonna have to watch these two play out and work, guys, and just monitor them. I think this one is the one that we could catch. Wait, what am I doing? I really must be sleeping. I think I'm just super tired for some reason. I drew up this 5 minutes because that was 5 minutes. I am so out of it today, guys. Here's a fair value gap. I think I drew up earlier and I said, oh, there's no fair value gap. But that's only because I went to the 2 minutes and saw this wick. And I was like, nah. So yes, you could have entered up here on the 2 minute, but to be safer, like really safer, you could enter as it closes below the 5 minute. Both are still okay. This is just more the riskier setup, and this is more the safer setup. There might even be one on the 15. No, there's not. Okay. So just so you guys know, the riskier setup is up here, which is the 2 minute setup, which is this one here. Okay. That's the riskier setup. Was it the 2 minutes? Please tell me it's the 2 minutes and I'm not just going crazy. What is happening? Yes, there. Okay. There's the 2 minute, right? That's the riskier setup. The safer bet would be for it to inverse this and close below here. And then your stop loss would be up here somewhere by the 2 minute fair value gap. And then you would then ride it all the way down. That's the safer bet. Gold bounced off, gone up. Previous day high is the target. You'd be at your stop loss will be break even right now. All right, guys. Well, I'm gonna call it there. A couple of my mates are jamming at the moment, so they don't really want to be on stream. So I'm gonna call it, guys, and we're gonna have a good jamming session. So I'll see you guys very soon. Take care. Have a great day, and I'll catch you guys in the next stream. We've taken our trades, and hopefully you guys, whoever's following, learned something. If not, from Monday onwards, ask me anything you want, guys.